Okay, so there might be some background noise today, so because there was some kind of puja is going on here, so you gotta be adjust with that. Now, yeah, so if you have completed all the problems, whatever we have done, now we're gonna continue. But before continuing, we'll take 2 minutes to revise everything. Okay, I want answers while doing this. So, what are all the things we discussed in this chapter? What is the format? What is the format to find out or compute income from house property? What is the first thing we will do?
So we have to find the GAV, gross annual value.
How do we find out the GAV?
So we have to first compare municipal value with fair rent, and whichever is higher, we have to take that. And then we have to compare it with the standard rent, and then we have to take the lower one. And then at last, we have to compare it with expected rent, and whichever is higher, it will be the final GAV.
No, just a small mistake. So first we'll find out the municipal value or fair value, whichever is higher, right? So you will get one figure. So and then you will compare that with the standard rent. Okay, then you will take whichever is lower. Whatever the number you will get, that is called expected rent. And then now you will compare it with the actual rent received or receivable. Then you will get the GAV. Understood?
Yes, sir.
Now, from GAV, what do we do?
So we
We
have
will
to deduct
deduct
the municipal taxes.
municipal taxes. Okay. So now, for self-occupied property, do we deduct any municipal taxes?
No, sir.
No. Okay. Then you will get NAV. So from NAV, what we are going to do? We are going to do some
Deduct
deductions under section.
24.
Very good. Under section 24. What are all the deductions we have? One is
Standard deduction.
NAV flat deduction 30% standard deduction. Okay. And then another one is interest on
Interest on borrowed capital.
borrowed capital. And then there are some limits. If it is a let out property, what is the limit? If it is a let out property,
So
what is the
2
limit?
lakh.
If it is a let out property,
No
no
limit is
limits.
there.
If it is a self occupied property, then we need to check, is it for construction or is it for repairs? If it is a construction, then 2 lakhs. If it is a repairs, then 30,000. And overall, we are going to give 2 lakhs only. Individually 2 lakhs and 30,000. Let's just say total we got 2 lakh 50,000. Like construction and repair combinedly we got 2 lakh 50,000. But we are going to give only 2 lakh. Okay, let's just say in the question they have given like this. So construction is 2 lakh 10,000 and then repairs is 40,000. So what we're going to do is from construction first we are going to take it as 2 lakhs because maximum deduction we're going to give for construction is 2 lakh. For repairs maximum deduction we are going to give 30,000. So total 2 lakh 30,000. Again this is the total, but again we will restrict it to 2 lakhs because maximum deduction overall deduction cannot be more than 2 lakh. This is all what we discussed. Okay, then what else we discussed? So this is the format which you need to follow for every problem, like same format. See, remember that if you want to solve the questions properly for every chapter, for IFHP there is a format, for capital gains there is a format, for PGBP there is a format, right? And for salary also there is a format. So mostly these three things you need to follow the format properly, and very importantly PGBP. Okay, so they would have given in the beginning itself. You need to stick to the format whenever you are doing a question. So here in IFHP it's a very easy one. This is the format. Then finally after doing all these deductions you will get IFHP. Okay, so this is one thing. And also what else we discussed in the house properties, there are two types. One is let out property, another one is self occupied property. Okay, maximum how many properties I can claim as a self-occupied properties?
So 2.
Very good. Maximum 2 properties I can claim as a self-occupied property, and if it is a self-occupied property, NAV will be considered as a nil
Value.
right? And then from there you are going to deduct sections under 24. Same thing, interest on borrowed capital maximum 2 lakhs and then 30,000 and then overall 2 lakhs. That's all. Now when it comes to the let out property, then we have different scenarios. One is if it is let out for the full year, then no problem, whatever the format we used, and then same thing we will use. But when the let out is for the part of the year it is let out, and then part of the year it is self occupied, then what do? Part of the year it is let out, and then remaining part of the year it is self occupied, then what do? Any idea?
So we have to treat them as a separate property.
No, not that one. So we will take it here, expected rent for whole year or actual rent for the let out period, whichever is high, low, high, whichever is higher, right? So obviously most of the times actual rent will be the lesser one, because we have done a question on this in the last video, right? Obviously actual rent will be lesser because it is only for, let's just say this is for 8 months, but expected rent will be taken for whole year, which is 12 months. Normally it will be the lesser. Okay, and whatever you have told, like it will be treated as a separate property, that will work for something else. Let me show you here. And then I am not telling all these things, like like building, it should be what is the property, the vacant land and all these things, so you can just revise from whatever we discussed yesterday. Okay, so yeah, so if you see, this is the part of the year let out and part of the year self occupied, second situation. Then we will take ER for the whole year and actual rent for the let out period, whichever is higher. Then the third one, a portion of the house is let out and a portion of the house is self occupied. Then here you treat them as a separate unit. Okay, so there are two things, part of the year is let out and part of the year is self occupied, and then this one is portion of the house is let out and portion of the house is self occupied, like ground floor, first floor. Okay, that is year, that is different, this is different. And then here you can treat them as a separate unit. And then deemed to be let out, so we discussed, like you only told, maximum we can claim 2 properties as a self occupied property or unoccupied property. Okay, so remaining houses, it should be deemed to be let out, right? When it is deemed to be let out, obviously there is no actual rent, so then expected rent will be considered as a GAV. We know how to calculate expected rent already. Okay, so these are the things which you need to remember. And then one of the very important thing, when there is a vacant, like we discussed, let out property is vacant. See here, there is one more thing here, don't confuse here. For second thing, in the second case, what did we discuss? Part of the year, let's just say 6 months, or let's take 8 months, it is let out property, and then 4 months it is self occupied property. Or another third case, like portion of the house is self occupied and then portion of the house is let out. In both cases it is not vacant, there is no vacancy, it is house is occupied. Okay, but here if there is a vacancy, then we need to check, is it because of the owing to vacancy? That means the tenant vacated, and then to find a new tenant it took 2 or 3 months for us, right? It is because of the vacancy, there is nothing else. Not owing to vacancy, that means due to some other reasons, whatever the reasons it is, they will mention in the question itself. If it is so, we need to check if there is a vacancy, is it because of the vacancy or is it because of some other reason? If the house is vacant for part of the year, then check, is it because of the vacancy or some other reason? If it is because of the vacancy, then you take actual rent as GAV. Like obviously if you compare, normally what do? We will take expected rent or actual rent, whichever is higher. See, there are 3 steps we do: high, low, high, right? So we will take expected rent or actual rent, whichever is higher. Normally expected rent will be higher because expected rent for the whole year. Actual rent will be lesser. Why? Because it is vacant is there, there is a vacancy. So like we will consider it is a genuine case. So we will take here, we don't take expected rent, we will take actual rent as GAV. And then if it is because of some other reason, okay, that means it's some, like for some reason income tax department officer did not feel that it is vacancy actually, right? There is some reason is there, so we will take expected rent only. This is normal scenario, we will take whichever is higher. Obviously expected rent will be the higher, expected rent is equal to GAV. See, make sure you learn all this scenarios. Okay, if I ask, can you guys tell me? Anybody can tell. Okay, whatever we discussed, we have discussed first scenario. What is the first scenario? Let out property is it is let out for the full year, there is no problem here. Let out for the whole year. What is the second scenario? It is let out for the
Part of a year.
part of the year, and then it is self occupied for part of the year, right? Then in this scenario, what do we do? Let out for the part of the year and then self occupied for the part of the year. In this scenario, what do? We will take expected rent for
Whole year.
whole year and then actual rent for
Let out period.
let out period, and then we will take whichever is
Higher.
higher. Very good. This is the second scenario. And then third scenario, this is easy. A portion is self occupied and another portion is let out. Then you do separately the format for this, like GAV minus municipal taxes, all these things, and then you do separately format for this, like NAV is equal to nil, because GAV and all this stuff will not be there, because self occupied property you can directly start NAV is equal to nil, then minus deduction under section 24, separate format. This we will treat as a separate unit. Then what is the another scenario? What is the fourth scenario? Deemed to be
Let
let
out.
out, right? So when we can choose any two properties as a self occupied or unoccupied property. Let's just say you have 4 properties, out of that you can choose 2 properties, any 2 properties as a self occupied or unoccupied property. Remaining property is will be considered as a deemed to be let out. When deemed to be let out, what is the GAV? When deemed to be let out, what is the GAV? Is there any actual rent here? What is meant by deemed? Why nobody is answering?
So expected to be let out.
Yes, because there is no actual rent, right? So we cannot compare it with anything. There is no actual rent only. So expected rent will be considered as a GAV. And then we discussed, if the let out property is vacant for the part of the year, like it's just a vacant, then we need to check, is it because of the vacancy or is it because of any other reason? If it is because of the vacancy, then what do we do? What do we take? We will take
Rent will be taken as GAV.
actual rent will be taken as GAV. If it is because of some other reason, then we will take expected rent is equal to GAV. That's all. This is pretty much like 70% of the IFHP. Okay. Then one more part we discussed about the unrealized rent. Okay. So when can we claim the unrealized rent? We can deduct from the actual rent minus unrealized rent. This is one method. Or you can deduct after finding out the GAV minus unrealized rent. Okay, any method you can follow. If you follow different method, different answer will come. Okay, now actual rent minus unrealized rent, when can we do that? What are the conditions to be satisfied, which is mentioned in the rule 4? What are the conditions? So bona fide,
Bona fide.
then the defaulting tenant should not stay in any of my house, okay, and then I have taken all the legal proceedings to make him vacate. So if all this condition, obviously I like I have taken all the legal proceedings to make him vacate my property and also to receive my unrealized rent. So all these conditions fulfilled, then you can claim the unrealized rent. If it's not, then you cannot claim. We have done questions also on this part, okay. And then one of the important thing in the interest on, one more important thing is interest on borrowed capital. So in interest on borrowed capital, for let out property there is no limits, we know that. Self occupied property 2,30,000, that also we know. We also discussed something about the pre-construction interest. Pre-construction interest, this applicable for both let out property and self occupied properties, okay. And pre-construction interest, can I claim, let's just say my pre-construction interest 1,50,000, can I claim entire 1,50,000 at one shot?
No, sir. At 5 installments.
I can claim at 5 installments. What are the steps to find out the pre-construction interest? Step 1,
Date of completion.
date of completion of the construction. Step 2, we have to take preceding 31st March or date of repayment of loan, whichever is earlier. Then you will get one date. Then you find out the pre-construction period. Start date is date of loan borrowed and end date is step 2 date. Then pre-construction interest. Then you will do step 5, step 4 divided by 5. And also in the past video I have done step 6 also. You can just check that out while solving the question itself. We have done that. That's all. And I'm going to explain one more new concept, just a small one. It's not that difficult. So we're going to do one more concept and then we're going to complete this. We can directly start the problems. Okay, you can put a heading, co-ownership, co-owned properties. That means one property is owned by multiple people. Co-ownership. If there is a co-ownership, what do we do? Then we need to check, can we, whatever the shares, let's just say one house property is owned by A, B, C, D. Check how much A share in that, how much B share in that. The shares are ascertainable, okay. Shares are ascertainable. Then if not, then what is the situation? You can able to tell how much is A share in that, like A has 50%, B has 20%, C has 30%, like that you can able to tell. The shares are ascertainable. Then after that check out, is it a let out property or is it a self occupied property? If it is a let out property, then compute as if there is a single ownership, as if there is a single ownership, then split according to the percentage whichever they have given in the question, right. First you compute as if there is a single owner, then you split. But what if it is a self occupied property? Then you do separate calculation. Like let's just say here A has 50%, B has 50%. Then do separately for A. Let's just say municipal value they will give for full year like 50,000. Then A has 25,000, B has 25,000. For fair value also they will give like 1 lakh. Then split it 50,000, 50,000 based on their percentage, whatever they give. That will be given in the question itself. Okay, do separate calculation. Then shares are not ascertainable. Shares are not ascertainable. In this scenario, consider this as if it is association of person. Anyway, this is not in our syllabus, so we don't need to worry about it. Understood, guys? And interest will be allowed on here accrual basis. That means it doesn't matter whether you paid it or not. And also we also discussed one more thing. If you have any property outside India, if you are a ROR, it is taxable. And also whatever the municipal taxes you have paid outside India, you can claim here. So these are all what we discussed. Okay, next let's discuss one more small question. But in this question we are going to discuss about pre-construction interest, and also we are going to discuss about co-ownership concept also. I have sent one more PDF to you recently, so I guess you can see this. Yeah, Sheetal and her brother jointly own a bungalow. They had taken housing loan to purchase the bungalow. The loan is sanctioned in the name of Sheetal and her brother in the year of 2015. Interest on housing loan for the previous year 2018 and 19 amounted to 4,50,000, which is paid by Sheetal 2,25,000 and brother 2,25,000. What do we understand from this? They are sharing 50%. Probably their share is 50% only. If you see, they jointly own a bungalow. That means it is nothing but co-ownership. We already discussed shares ascertainable or not. First check that. Yes, by this we can find out, they shares are ascertainable because they are sharing the obligation equally, because they are paying the interest equally. So 50%. Then check out, is it a let out property or is it a self-occupied property? If it is a let out property, what do? We will treat them as we will find IFHP as if there is a single owner, then split it. Now if it is a self-occupied property, do separately. Okay, now here the bungalow used by them for their residence, so that means it is a self-occupied property. In this case, what will be the amount of deduction under section 24B? What is this? What is this 24B?
For interest on borrowed capital.
Interest on borrowed capital. Very good. Okay, now that we need to find out how much deduction we will give. Okay, now you tell me, obviously we will solve it. We don't know what will be the answer yet, but what is the maximum deduction they can get anyway?
2 lakh.
2 lakhs. If it is a self-occupied property, maximum deduction they will get 2 lakhs. Yes, of course you can just directly put that and then leave it, but we will do it. I want you to understand the thought process, how we will get the answer. Okay, this is a simple one, but it is not every time. Maybe there may be a twist in that question, right? So we will just do the answer. We know that self-occupied property, it is maximum 2 lakhs per construction, and then repairs 30,000, overall 2 lakhs limit, aggregate limit, right? So here, and also there are some conditions, like if you want to claim the interest on borrowed capital, this is just theoretical, we did not discuss it previously. So there are some conditions. Condition 1, the loan whatever we borrowed, you should have borrowed on or after 1/4/1999. Okay, then condition 2, you should have borrowed the money for purchase or construction only, not for any other purpose. You should have borrowed the money for purchase or construction only. And then condition 3, you should have completed the construction within 5 years. Okay, you should have completed the construction within 5 years. If you did not complete the construction within 5 years, then you are not eligible. Now this is an important condition. Now how do we check whether he completed the construction within a 5 years or not. So you will get a certificate also that you are from competent authority that your house is completed. So if all the conditions are satisfied, then only you can claim the interest on borrowed capital, or else you cannot claim. Okay, so from the date of borrowing within 5 years you should complete. So date of borrowing, okay, so from the date of borrowing, like in a financial year wherever you have borrowed, so there is a financial year, like let's just say 2017 and 18, right? In that financial year, count from the end of the financial year, end of financial year plus 5 years. Okay, then if you have done that, then all the conditions are satisfied, then only for interest on borrowed capital you are eligible. Now tell me, in this question, condition 1 satisfied or not? We have taken a loan, right? We have taken
Yes.
loan for what? For construction of purchase of the bungalow. Okay, and then obviously we have taken a loan after 1999. So condition 1 is satisfied. So let me take that out. Condition 2 also satisfied. So take that out. Now the important one, condition 3. Did I complete my construction within 5 years or not? That we will check. Okay, so when did I borrow the money? The loan is sanctioned in the name of Sheetal and brother in the year of 2015. Okay, so 2015, and then did they mention in which year they have completed the construction? No, they did not mention.
No,
But
sir.
obviously it is used for the residence, so that means it must have been completed only. The bungalow is used by them for residence, so that means it must have completed. But anyway, let's do it here. Okay, because here it's not about this question, it's about understanding the concept. Okay, now what is the date which we completed the construction? Okay, I think it's not required. Sorry, no mind. We did not given. Yes, we obviously completed within 5 years, so you can claim the deductions. Okay. Now, you remember the pre-construction interest calculations and everything, right?
Yes, sir.
Right? Okay. So yeah, I guess you can go with this only. So I wanted to explain that conditions, that is enough. So maximum limit can be claimed by them anyway, only 2 lakhs. Okay, now that is the answer. Next one. Next we'll do some more questions here, and then we'll come to one big questions which can cover pretty much everything. I think here I have written somewhere else. Yeah, so this is the question which covers pretty much completion, construction and everything, pre-construction interest and everything. But let's do one more like basic questions also here. Yeah. Okay, this will be a little bit long, so I'm gonna explain from the book itself. Okay, this one. So this is when there is a deemed to be let out. Now what are the conditions? What did we discuss about the deemed to be let out? When assessee has more than 2 houses which are used for the self-occupied, then he can claim either of the 2 houses as self-occupied, yes, or unoccupied. Remaining will be deemed to be let out, right? Either he can claim anything. Now here is the question, he can claim either. Obviously if you are assessee, you will choose which like the house which has income from house property more, right? Because we know that self-occupied property is NAV is equal to nil. You don't need to pay any tax if it is a self-occupied property. So you need to choose in such a way that your tax will be lesser. Okay, now so like this, here they have given 3 houses: house 1, house 2, house 3. Okay, remember the self-occupied property means ceiling limits will be there. If it is a let out property, no ceiling limits. Now they have given date of completion or purchase, and then municipal taxes paid during the year, and then interest on money borrowed for repair of property during the current year for house 2, and interest for the current year on money borrowed for April 2016 for the purchase of the property. Remember, we will give 2 interest as a deduction. One is current year deduction if there is any, and then pre-construction interest if there is any. Total 2 deductions we will give. If it is a let out property, no ceiling limit. If it is self-occupied property, we will limit it to 2 lakhs. Okay, so here if there is any past year pre-construction interest for repairs or anything, we will give that. So this one and then this one. Okay, now you tell me, okay, let me ask one little bit simple question. Assume that I right now I am in 2024. So in 2023 or 22, I have taken a loan for repairs. I have taken a loan for repairs and I am paying a interest on it. I am paying a interest on it. Can I claim that as a pre-construction interest? Yes or no? Can I claim that as a pre-construction interest? See, my house is completed and everything is happened in 2024. I started using from 2024. In 2022, there was some repairs also, right? While constructing only some kind of repairs happened. I did not give full picture, so that's why some reason repairs happened. Can I claim that as a pre-construction interest? What is our condition 2 while claiming the interest on borrowed capital? Fast. What is our condition 2? You should have borrowed the loan only for the purchase or
construction of a house.
Yes. So that means if you have incurred for the repairs, no. You should have borrowed only for the purchase or construction. Okay. Now let's start this question. Ganesh has these 3 properties. They have given normal, this is the stuff which is used to find out the GAV, which we know anyway. And then here compute Ganesh income from house property for the assessment year 24 and 25 and suggest which house should be opted by Ganesh to be assessed as a self-occupied property so that his tax liability is minimum. See, normally we can just compute house 1, house 2, house 3 and then leave it. That's not a big deal. But here we need to advise him, because he can select either of the house. Like he can maximum select 2 houses as a self-occupied. Now which one he has to choose as a self-occupied is the question. Alright, so here house 1, house 2, house 3 is there. Now let's see. Here we have chosen, we have calculated for everything, assuming that they are deemed to be let out. What did we do? That means everything is let out only. Like here we have calculated as if all the houses are let out. So see what they have done. I don't think so I need to explain this part. First I'll explain house 1 only, then remaining thing it's same for everybody. Okay, now or we will take house 2. Okay, so for house 2, what do we do? First high, low, high, municipal value or fair value, whichever is higher. So 3,60,000. Then we will compare it with the standard rent. Then we will get expected rent, whichever is lower. then we'll compare it with the actual rent. Okay, now why there is no actual rent in this question? Anybody? Why
Because
they
it
did
is
not?
deemed to be let out.
Very good. When there is deemed to be let out, what do we do?
Expected rent is a GAV.
Expected rent is equal to GAV, because there is no actual rent, because we did not actually given a let out, it is just assumption, assumed, deemed. Okay, so we will take 3,60,000 as the GAV. Then from there they mentioned what? Municipal taxes 8%. 3,60,000 into 8%, if you do, you will get 28,800 municipal taxes. So you will get the net annual value 3,31,200. Then from this 30% of NAV flat deduction, interest on borrowed capital, which is given in the question itself, you don't need to do any kind of calculation, which is 55,000. Then you got the answer. So like this they have done for the house 1, house 2, house 3. See here, one of the important thing, we assumed all houses are let out only. Okay, now from here we will check. Here if you see, we have 3 houses, right? So you can choose, like, I will choose H1, H2 as self occupied, H3 as let out, or I can choose H1, H3 as self occupied, and then H2 as let out, deemed to be let out. Like this I have all the scenarios, like maximum you can write 3 scenarios. See what they have done here, 1 and 3, like normally you have 1, 2, 3, right? Choose the scenarios, like I'll choose here. What they have done here, they choose option 1, 1 and 2, that means 3 is let out. Then option 3, option 2, here 1 and 3, that means 2 is let out. Okay, then again here they choose 2 and 3. Now while choosing, like, how do I come up with these numbers? Now, like, if you write all these things, 1 2, 1 3, 2 3, that's what they have written. Now in these 3 cases, can I say everything is covered, every house is covered, right? Like, every house is acting as a self occupied property, and then
Yes.
every house is acting as a deemed let out property, right? If you see in the first scenario, 3 is deemed to be let out. In the second scenario, 2 is deemed to be let out. In the third scenario, 1 is deemed to be let out. So that means I am touching all the scenarios, like, so this is the combination 1 2 1 3 2 3 they have taken. Okay, fine. First we'll do 1 2. If you take 1 2, that means for first house, and for second house, what can we do? We can claim as a nil benefit. Nil benefit. So right, if you see here, there is no interest on capital, there is no nothing here for the first house. Okay, then for the second house, there is a interest on money borrowed for repairs for the property during the current year. They have given 55,000. Okay, okay, just a second. So this is whatever in the first one, this is under section 115 BAC, which we did not discuss. I need to check that, because it is discussed at the end. I need to check the CS syllabus also. So let's not concentrate on that. Now let's come under the normal provisions here. Okay, in this provisions, for first house there is no interest, so you can take NAV is equal to nil. There is no deduction of 30%, so finally everything you will get nil only. But for the second house, okay, there is a interest on borrowed capital for repairs, right? If you see, there is interest on borrowed capital for repairs. How much? 55,000. But can I claim entire 55,000 as a deduction?
No, sir.
If the no,
Only
how much I can
30,000.
claim? Maximum.
If
Yes.
30,000.
30,000, right? So 30,000 answer I will get negative. So that negative answer will be my loss from self-occupied property 30,000. And then this 73,640 anyway I have calculated in the first step only. What did I do in the first step? I assumed all the houses are let out. If it is a let out property, how much is the answer? 73,640. I will just write that. Okay. Now let's write it here itself. Why just waste? So first option is what? 1 and 3. First option is 1 and 2, right? Yeah, 1 and 2. So first house is nil, second house is 30,000 loss, and then another one is what? Deemed to be let out income is 73,640. Okay, so 73,640. Now if you see net, like if you just do the net part, so you can set off 73,640 is the income from the third house which is let out. So we got a loss of 30,000. So 43,640 is the income from house property if I choose this option. Then next option is what? 1 and 3. If I choose 1 and 3, 1 anyway nil, right? I am taking second as my deemed to be let out, and then 3 as my self occupied property. Okay, so 1 is self occupied and then 2 is let out property. Okay, now come to the third one, self occupied property. Now you see me you see the question and then tell me third house. Okay, the GAV is 3,75,000. Okay, the third house we are considering as a self occupied property, right? So NAV will be nil. NAV will be nil because we are considering, am I taking the right combination? Yeah, 1 and 3 I am taking as a self occupied property. So NAV will be nil minus deduction under section 24. Interest on borrowed capital. Do I have any? If you see, I have 1,75,000 interest on borrowed capital which I can claim. So I will claim interest on borrowed capital 1,75,000. So I will get loss from house property 1,75,000. Okay, so if I choose this from the third house, I will get loss from house property 1,75,000. And I know already, and I am choosing what? This one, deemed to be let out. Second house as a deemed to be let out, right? 1,76,840 I have to pay. 1,76,840. So if you take that out, 1,76,840 minus 1,75,000, I will get 1,840 only will be considered as a IFHP. See how much difference from the first option and second option. Okay, now I'm gonna show the rest of the thing here. See, that's how we got 43,640 first option. If I choose the second option, 1,840. Now if I choose the second and third as the self occupied, and then house 1 is a deemed to be let out, I'm getting 19,800. Obviously second option is most beneficial. Guys, did you understand, or you want me to do the entire question?
So
Yes,
understood.
sir, understand.
Understood, right? Yeah. Next. Yeah, so this would be probably co-ownership. Okay, co-ownership is here. Yeah. Okay. Portion of the house is self-occupied, portion of the house is let out. What do we do in that scenario? What do we do in that scenario? If the portion of the house is self-occupied and then remaining portion of this let out property, what do we do?
Treat them separately.
That's it. Treat them as a separate unit. Okay. Now, Prem owns a house in Madras. During the previous year 23 and 24, 2/3 portion of the house was self-occupied. Okay. So that means 2/3 is self-occupied. Okay. Then 1/3 was let out of the for residential purpose. It doesn't matter whether it is residential purpose or commercial purpose. Is it let out or not? That's what we want. At a rent of 8,000 per month. Municipal value of the property is 3 lakh per annum. Now what should we do this? They have given municipal value per annum, fair value per annum, standard rent per annum. So what should we do? We are taking separately, right? 2/3 separately, 1/3 separately. So we need to split everything because we are doing separately, right? So we need to split all these things. Okay, he paid municipal taxes at the rate 10% of the municipal value during the year. Okay, municipal taxes here, for the self-occupied property, can you claim the municipal taxes? Whatever the municipal taxes you paid, you cannot claim. Okay. Now, if you see one important thing here, I want to clarify here itself. So, municipal taxes you have paid total 30,000. This also you need to split it. Okay, this also you need to split it. Everything you need to split it under 1/2, 1/3 and 2/3. Okay, that's all this part until this here. Now from here, a loan of 25 lakhs was taken by him during the year 2019 for acquiring the property. All the conditions are satisfied. Interest on loan paid during the previous year 2023 and 24 was 1,20,000. Compute the Prem income from house property for the assessment year 2024 and 25, assuming that he has exercised the option of default regime. Okay, this 115 BAC, forget about that part. What would be the Prem income from the house property under the default tax regime? So we are opting out. We are doing this shifting out. Default tax regime is 115 BAC. Right? If you shift from that 115 BAC 1A, this only we are discussing. 115 BAC we did not discuss yet. We will discuss it later. Right? So previously it wasn't there. Previously it was a little bit different. From 2024 only this thing is coming up. So first we will discuss what is there. Then we will discuss this 115 BAC thing. Okay. So simple. First thing is split it. Everything split it. Now it's very easy to find out the self-occupied property. Self-occupied property is 2/3 and then let out occupied property is 1/3. Okay. Now do I need to find out GAV under the self-occupied property? Do I need to find out?
No, sir.
No, because I know if it is a self-occupied property, take it as nil. NAV is equal to nil. Minus deduction under section 24. First one is flat deduction 30%. Anyway, that is not applicable. Just give me a second, guys. So the 30% is anyway not applicable. Then I will claim the interest on borrowed capital. Okay. Now interest on loan paid during the previous year is 1,20,000. 1,20,000. Now come here. 1,20,000. This also split it because my house is 2/3 only. So 1,20,000. If you do 2/3, you will get 80,000. So I will get loss from house property 80,000. That's all. No doubt, right? Now, while doing the let out property, we need to split. We need to find out the GAV. So, how do we do this? 1/3 is the let out property. Now, municipal value of the property is 3 lakhs. So, we do 3 lakhs into 1/3. You will get what? 1 lakh.
Please.
This is municipal value. Then next, fair rent is 2,70,000. Take your calculators with us. 2,70,000 into 1/3. 3 9s are 27, 90,000. whichever is higher, 1 lakh is higher. Then you compare with the standard rent. Standard rent is 3,30,000
1 lakh
into 1 by 3. So which is 1,10,000, whichever is lower.
Lower.
Then you compare it with the actual rent. What is the actual rent? 8,000 per month. So 8,000 into 12, which is 96,000. Right? Whichever is higher. Right? So then you should get 1 lakh as the GAV. That's what we got. Right? High, low, high. So 1 lakh as GAV. Then municipal taxes. They mentioned a 10% on the municipal value. Municipal value is 3 lakhs. So 30,000 is the total municipal taxes. Split into 1 by 3, you will get 10,000. So 90,000 is the net annual value into 30%. 9 3 is 27. So 27,000 is the flat deduction, standard deduction. And interest on borrowed capital, right? Our total 1,20,000 is the interest on borrowed capital. 80,000 went to the self-occupied property. Remaining 40,000 went to the let out property. So 67,000 total. 90 minus 67,000. So 23,000 is the income from let out property. And from the first property you got 80,000 loss, and from the second property you got 23,000 rupees income. So if you set it off, still you got a loss of 57,000 rupees. This will be carry forward to the next year. Okay, next, if you get a next year income, you can set it off next year. We have a separate chapter anyway for that. That's all. Okay, so here they are talking about like what happened if you have chosen 115 BAC. Right, if you choose that part, like normally there is no this interest deductions and all, you cannot claim there. Okay, so there is only 23,000 income will be there. So that like very slight difference will be there. 115 BAC, very easy. That is not that different, not that difficult. Okay, now there is something called as arrears of rent or unrealized rent. Later it is received subsequently. That means let's just say there is a tenant right now in 2016. Okay, in 2016 one tenant, he escaped without paying the rent. We tried in every way, but he could not pay the rent. Then what should we would have done? We would have claimed the benefit, right? Like if he satisfied all the conditions at that point of time, he would have claimed the benefit. What is that? Actual rent minus unrealized rent, or another method, GAV minus unrealized rent, right? So that means to that extent he would have not paid the taxes. Assessee would have claimed the benefit of not paying the taxes. To that extent, whatever the money he did not receive, to that extent he would not have paid the taxes in 2016. Okay, later in 2020, like suddenly that guy changed his mind and then he paid that money. Okay, we received it. Like in 2020 we received the rent. Like let's just say X failed to pay the rent in 2016. The same guy, he is only coming voluntarily and then paying the money. Now in 2018 only I sold my house to somebody else. Now can I tax whatever the money receiving? Shall we tax it now? You understood my question, right? In 2018 itself I have transferred the house. Yeah, sorry.
Can you please repeat question again?
Yeah. So in 2016, there is my tenant. I am the landlord. There is my tenant called X. X did not pay the rent. Let's just say for 2 months he did not pay 80,000 rupees rent. He escaped it. So that time in 2016 I have claimed the benefit. Like while calculating the income from house properties, I have deducted that unrealized rent. In 2020, like subsequently, he is coming and then paying that rent to me. I am receiving 80,000 rupees now. After like 3 or 4 years, he is coming back and then he is paying the rent. But in 2018 itself, I sold my house to somebody else. I am not the owner of that house anymore. Now, but now I am receiving 80,000 rupees. Will it be taxable now? Yes or no?
No, sir. Because now it is not related to, he is not the owner of the house.
Okay, there is one more thing we discussed previously. So assessee should be the owner of the property, okay, but like if there is any unrealized rent, if he received later, he need not be the owner of the property. We will charge whenever we receive it, taxable in the year whenever we receive it, okay, because when he was my tenant, like in 2016 I am the owner, right? When 2016 I am the owner. So if you are the owner in the previous year, that is enough. That's what, that is the one, that is also one of the concept which we discussed. Assessee must be owner in the previous year. So we are talking about, like I am receiving a rent 80,000 rupees which belong to 2016. In 2016 he is the owner, right? In that previous year he is the owner. So assessee must be the owner in the previous year. So it is taxable. But in that year it is not taxable because we did not receive the money. So later we received it, then tax it whenever you receive it, okay. And then you will get a deduction of 30%. This is nothing but flat deduction we will give, right? Like no, the NAV 30% is flat deduction. That deduction you can claim now. 30% of the rent received or realized, okay. Now this part I am talking about. Taxable even if the assessee is not the owner of the property in the financial year of receipt or realization. It doesn't matter whether you are the owner now, right? You were the owner in 2016, but it doesn't matter whether you are the owner or not now. So the same thing here also in the question itself they have discussed it. Let's see this. Everybody still there or left already? Okay.
No, no, sir.
Anand sold his residential house in March 2023. In June 2023, he recovered a rent of 10,000 from Mr. Gaurav, to whom he had let out his house for 2 years from April 2017 to March 2019. Okay, now you see here, in June 2023 we recovered. So how much? 10,000 from Gaurav. Okay, during this period 2017 to 19, like 17, 18 and 18 and 19, during this period there is Gaurav is our tenant, and then he has to pay 10,000 rupees. He did not pay. Now he is coming again in 2023. That means this will fall under which year? 23 and 24. In 23 and 24 we are receiving it, okay. Now he could not realize 2 months rent, okay. Total 20,000 we did not realize, and then to that extent actual rent was reduced while computing the income from house property in that year itself. That means in 19 and 20 he claimed this benefit, actual rent minus unrealized rent. So that means we did not tax for that unrealized rent. Further, he had let out his property from April 2019 to February 2023 to Mr. Satish, okay. In April 2021 he had increased rent from 12,000 to 15,000 per month, and the same was the subject matter of the dispute. In September 2023 the matter was, okay, we'll do this Satish part later. Now let's see about the Anand part right now. Now section 25A says, what does it say? Like whenever we receive it we will tax it, okay. So even though Mr. Anand was not the owner of the house, yeah, because the beginning only they started. Mr. Anand sold his residential house property in March 2023. So that means in 22 and 23 itself the house is sold, but we received the money in 23 and 24. So the same things whatever we discussed, 23 and 24 is the previous year we received. That means it will be taxable in the assessment year of 24 and 25. In the assessment year of 24 and 25. So the year in which we received is 23 and 24. So the assessment year will be 24 and 25, which we will tax on it. Now we know that Anand was not the owner of the property. What did we discuss previously? So it will be taxable in the year of receipt of realization. Yes, we received in the previous year 23 and 24. So it will be taxable in the assessment year of 24 and 25. So flat deduction 30% we will give, and then he need not be the owner of the property. Everything same thing here discussed. Nothing else is there. We don't need to spend much time on this. Okay. So unrealized rent, this is one thing, and then this another thing is Satish. Mr. Anand received 69,000 as a arrears of rent for the period of April 2021 to 2023. Okay, so this is another tenant. We have let out to some other tenant. Okay, and then we have received 69,000. Then total it will become 79,000. Deduction we can claim. So income from house property is 55,300. If you need to observe one thing, they use something called as unrealized rent, and then they use something called as arrears of rent. See, unrealized rent means like something from the past, like 3 or 4 years ago there was a tenant who did not pay the money, later he paid it. Arrears of rent means like let's just say he is still continuing as a tenant and then he did not pay the rent, like from last 2 or 3 months he did not pay the rent, like same thing, it happened in the previous year only. Like see, because if you see here, Satish is there from February 2023, right? So in the current year, like in the previous year only, so in the previous year only he did not pay, so that's why that is called arrears of rent. So they also used here, you don't need to confuse also, they only mention in the question itself, the same thing you can write it. So arrears of the rent means like if you are talking about the last year rent we did not receive, and then if it is unrealized rent means like past 3 or 4 years rent we received now. Okay, that's it. Co-owned property we already discussed, as if it is self-occupied property, let out property, all these things we discussed, and then question also pretty much on this only. There is one question, one last question. This is not a question actually, this is a deemed ownership. Sometimes what do we do is, if I get any income from my house property, it will be taxable in the hands of assessee. It will be taxable for me only. So what I'm going to do, I'm going to transfer to spouse, wife or husband, right? Both spouse means both wife or husband. So then let's just say I already have 10 lakh rupees like salary income assume. Then if I get 5 lakh rupees IFHP, total my income will be 15 lakhs. So if my total income is more, the slab rates will be more, right? Like up to 10 lakh 30% and all. So slab rates, like more rate will be applicable, tax rate will be different. But let's just say my wife does not have any income, nil. So if she receive 5 lakh rupees, up to 5 lakh I don't pay any tax, like she don't pay any tax. We know that if you apply the 2,50,000 nil after claiming the rebate and all those things, if you know those things it's fine, or else don't bother it now. I'm pretty much sure that who has done the basics, they would have known it. So you can claim the rebate and everything. So up to 5 lakhs you don't need to, pretty much nil, you don't need to pay anything. So she won't pay anything, so that I can escape the tax by doing that. So that's why people are doing that. So that's why, just to escape the tax, if you transfer your house property to your spouse name, okay, and then whatever the benefit, whatever the rent she will get, normally it should be taxed on the hands of wife only, but it will be taxed on the husband name only, right? Because we know that you are intentionally doing this, okay, you are transferring your ownership to your wife, so that IFHP will be taxed under your wife name. But income tax department will say, see, even though legally your wife is the owner, but I will consider you as the owner. See, legal owner may be different, but according to the income tax I will consider you as the owner. So that is called deemed ownership. That means even though you are not the owner of the property, I will consider you as the owner of the property. Did you understand? Like normally I will transfer for inadequate consideration, like Now just for namesake, I want to transfer my, let's just say my house value is 10 lakh rupees. I'll transfer it only for 2 lakh or 3 lakh rupees to her. Okay, then tax will be I will ask the income tax department to tax my wife, not me. So they will tax the wife and then they will get the less income tax. So that's why they have come up with this thing. Let's just say the wife and husband are separated because of the divorce or something, agreement to live apart. Then if the husband transferred something to wife, then the deemed concept will not apply. Okay, wife is separate, husband is separate here. Then I can also do, like if I want to evade the tax, one more thing I can do is I can transfer my house to my child. Child also has no income. So if I do that, then also income tax department will think you are the owner of the house, but you are just doing this just to evade the tax. So they will consider you as the owner only, not your minor child. But if it is because of the minor married daughter you are transferring it, don't ask me, sir, how it is a minor, how can she marry and all. That is a different law. Okay, in income tax department we don't care whether it is a legal or illegal income, we want to tax it. Okay, then the transferor is not to be the deemed owner. This is an exception. That means if you transfer any property to the minor married daughter, then the deemed ownership concept will not apply. Okay, so impartiable asset, holder of impartiable asset which is not legally divisible. Okay, that means let's just say A, B, C are there, or from Hindu Succession Act, there is a father and then sons are A, B and C. So there is a property, but it is still in the court that we actually not sure to whom it will come, either it for A or for B or C, and we are unable to devise this is the A property, this is the B property, this is the C property. Then what do we do is we will consider as the owner of all properties comprised in that sense, whoever is the holder, whoever is holding that, let's just say until it is settled that house, normally it is in the court. We don't know whether the house belongs to A, house belongs to B, house belongs to C. So that's why it is held by somebody else, X. Then X is the holder of that house, so let's tax him. We don't care who is the owner. So X is holding that house, so let's tax the X. So this is pretty much theoretical concept, there is no questions on it, but you have to know it. Okay, so member of cooperative society. In cooperative society, the owner will be the cooperative society, but you just got the house in that. So then you will be taxed it. You will become the owner. You will be deemed to be a owner. Okay, person in possession of the property. You might have learned probably in somewhere else. There will be two things. One is right to own. Another one is possession. That means you just have a possession, but you are not the owner of the property, right? There is a ownership and possession. You will get anyway this transfer of property we have in some other laws, there we will discuss it. Okay, that is not that important. So pretty much we have covered all the concepts in the income from house property. Now what I want you to do is, I want you to, if you want I can send this PDF only. There is another problem. We have done only illustrations only. There are practical problems also. I want you to complete this. And also I want you to go to CS book and complete it, and if you have a tax scanner, make sure you complete all the problems from there, because in the ICSI material they have given only 2 or 3 problems and end of the chapter. Okay, if you buy any scanners, you just want more questions. If you buy any scanners, they would have given more questions. Make sure that you complete all those things. Okay, this is another concept called composite rent. So with this, yeah.
So the topics you are teaching, I can't find them in my book of CS tax law. So can you please explain that thing?
No, it is there. I'll show you.
Okay, sir, sure.
So even if you directly, like even if you did not see any concept, even if you directly start doing the what do you say, the questions, you will get the answer same anyway. But I'll show you that also. Just a second, let me check here. Let me just tick everything whatever we have done in this. Okay, charging section 22, 23, right? Self occupied, unoccupied, pretty much everything is done. But let me show you here also. We discussed what is property, right, in the beginning itself, and then assessor should be the owner of the property. Land appurtenant we discussed, and then just now we are discussing deemed ownership. Ownership include deemed ownership, that's whatever we discussed now, right? And then we discussed, that property, use of that property should not be used by the business or profession. And then whatever we discussed, deemed ownership. And yeah, this stock in trade, I have given a notes for this stock in trade, like you might have used it for the like a business, right? This here I have given. Just a second.
আচ্ছা তোমার মাথা মুখ দুঃখে অনিয়ম তো বড় মাথা দুঃখতে হবে
So here, see here, so if it is a stock in trade, then what do we do is, yeah, this is one more thing in revision we did not cover, we just missed. See, if you are a stock in trade, then also you can claim as a nil benefit, right? If there is a property, then if you are if it is a stock in trade, and obviously it is an unoccupied property, then you can claim a nil benefit, but up to only 2 years. So same thing here also, that is same thing here is there. So you can claim a nil benefit for a period of 2 years, right? And then this is just just to read it. It's you can read it. It's not that important, and also it is not directly affect your question. What kind of business they are saying. Letting out is that's what they we discussed. Is it letting out is related to your main business? Then it will come under what? It will come under PGBP, right? Or you are a builder or constructor, then it will come under where? Same thing we discussed. Now composite rent we are still discussing now. This is not that big a deal. They have given 3 or 4 examples. That is very easy. Composite rent is very easy. Now this 115 BAC, something as a new system of tax. We discussed only existing system of the tax. Much they did not discuss anything more on this. So that's why I did not tell you 115 BAC. In your book they did not discuss 115 BAC much. They discussed here what is allowed, what is not allowed. We did not do any problem also. Now this part we have done determination of annual value. So what is that, how do we do the annual value and all these things. And actual rent, this they have mentioned here. What are the what is meant by municipal value, what is fair rent, what is standard rent, right? We discussed this rule 4. And this concept, when the property is let out for the whole year, discussed. Questions on that. Vacant for the part of the year. Self occupied or unoccupied, we know that 2 houses only. And then 2,30,000 question. And house let out during the previous year and self occupied, part of the year is self occupied, part of the year let out. So then deemed to be let out property, done. Okay, so notional income means I have explained. Notional income means it, even though it is not our income, but we will still tax it as our income. So that is not a separate concept actually. Don't think that I have, while writing the notes itself, I have written some places it is a notional income. then standard deduction 30% is interest on borrowed capital. Okay, and then these steps we have discussed, exactly steps also we have discussed. Okay, in the 6 steps, and then that's it. You see, is over. Then you have questions. House property income exempted from tax. See here, and also one more thing is, don't think that I have to read line by line everything in the book. Do the questions only, so you'll get to know what concept you have to read, what concept you have to see. They would have just copy pasted so many lines, so much stuff, and it's not possible to just read all the things, and then even if you read all the things, you cannot remember just day before exam. You don't have only 3 or 4 hours to revise, right, maximum. So you cannot do that. But 70%, 30% scrap will be there, 70% this stuff will be there, like important stuff, whatever we discussed, all the sections, that is enough to solve the problems. So unrealized rent and income from co-owned property, just now we discussed. Tell me, is there any concept which we haven't discussed and which is there in your book? Nothing. So luckily, I think I was checking something else. For this they have given plenty of questions only. Around 24 illustrations they have given. You can solve all these illustrations. And also if you are stuck anywhere, let me know, because there are mistakes is there in the CS book. So whoever is asked that question, your doubt is clarified, or like what exactly, where exactly you couldn't find the that concepts which we discussed there and then not here.
So the doubt is clarified now.
Right? So because I'm not explaining, I'm pretty much sure that I'm not explaining anything extra. And one more thing, what I'm doing is, I'm not starting reading book. Like if I read book like one by one, like it will take so much time. So what I'm doing is, everything is read already. All concepts I'm giving as a notes. Based on that we are solving some problems. All you need to do is understand the notes, read the notes, apply it while doing the problems. That's all. You can solve everything. In taxation part, you just follow that. Okay, so because normally if it is a regular classes, I'm pretty much sure that it will take 3 or 4 days to complete the IFHP only. We have done maximum 2 or 3 hours, right? If someone is already studied, they would understand everything at least once. But even if you are a new guy, so just complete everything, just read once the notes, write the notes, and you start applying that in the problems, so you will understand. Next, one last concept, and then and one more question I have. Maybe you can try that as a homework. It's a big question actually. It's this one. I wanted to do it now only, but I think it's more than 1 hour. It's this 7th, Ramesh and Suresh. You can try this as homework. It's actually very big question. There may be little bit complication also. Okay, so you can try this guys. Okay, that is one thing. And so composite rent means, like normally when you give a house, obviously lift we will give, like sometimes we'll give furniture also, or plant and machinery also, will combinedly we will give. That means we are giving building also, and then plus furniture also along with that, and we are receiving a rent for overall. Do we need to tax it or not? So for building rent anyway it will come under IFHP. What about the furniture rent and all these things? Then we need to check, for example, lift, security, power backup, all these things will be combined, and then we will get the rent. We need to check, is it separable or not? Okay, so is it separable or not? So without lift, nowadays people take building? No, right? So you cannot let out a building without lift, right? So this is inseparable. because without lift, how come, like let's just say it is 20 floor, 30 floor, 40 floor, right? So people obviously won't take the building. So this lift is mandatory, power backup is mandatory, security is mandatory. So I cannot sell, or I cannot give building separately, I cannot give lift and power backup, all these things separately. So these are unseparable. But let's just say there is a TV or fridge, obviously these are separable. Okay, that means like you can give a building for rent without giving the rent of a TV or a sofa. So those are separable. Like let's just say I am giving a fully furnished house for rent. So in that a TV is there, fridge is there. So for this I am separately charging the rent. So that will be taxed. Okay, separately. That will be taxed under either business income or income from other sources. Okay. If it is,
Yes.
yeah, just a second. Sorry, here. If it is separable, right, you do one thing. Whatever the money you are getting because of the building, let's just say in a building I am getting money for building, and also I have given furniture like TV, sofa and all those things. For furniture also I am getting. Then that whatever other assets you have given for rent, you charge that under PGBP or IFOS. But whatever you are getting from building, you charge under IFHP. This is if it is separable. You can separately charge for building, you can separately charge for furniture, because if my rent is 60,000, 50,000 is for building, 10,000 for furniture. I can separate it, I can easily separate it. But here, if it is inseparable like lift, I cannot separately charge for lift or power backup. Totally I will take 60,000. Okay, then you cannot do anything. You can charge everything under IFHP only. Right? It is, sorry, if it is not separable, then whatever the money you are getting, you charge under as a business income or IFOS, as the case may be, depends upon the situation. So they would have given some examples for this in your CS book. It is not that difficult. Even if you just give one read, you will understand. This concept is not tested in the questions anyway. Remaining everything, entire IFHP, we covered it. Okay, so I want you to do all the problems, like see here how many problems you have to solve. From here also, again you have in this PDF, again you have around 5 questions, right? In your PDF, like in your ICSI book, you have 24 questions. You can solve that. On top of that, again I have sent some more questions from past papers, like CA past papers, CS past papers. Right, I have taken some questions and I have sent it. You can do that also. So the more questions you solve in tax, you learn more, right? If you keep on reading the same provision again and again, it does not work out that way. Okay, so
Okay, sir.
do that question as a homework, then we'll start some new chapter, or in the next class I will solve that one question, and then we'll start the next chapter. Okay, but make sure at least one person would have done that 7th question as a homework.